Okay, well, good morning, everyone. I trust that everybody can hear me and see me. If there are any technical difficulties, feel free to call our number. But it is 11 a.m. sharp here in Toronto, and we are going to get started right on time as promised. So first, I want to thank everybody for taking the time to listen to our story. I know there's been a lot of interest in learning more about what we've been able to accomplish, particularly in January, as it was a busy month in terms of news releases. We had our January 30th news release talking about the spin co for the battery metals. A lot of questions there. We're going to address all of them today. And of course, what we've been known for the longest period of time, that's the Mirado mine, its PEA. I'm going to go through those details. And then lastly, I'm going to be talking about the Knight acquisitions, which we announced on January 5th. All of these things, or each of these things, took a long time in the background. A lot of work went into them. They all happened to come to fruition in January 2018. And it's a lot for the market to absorb. It's a lot for our shareholders to absorb. And that's why I'm kind of excited about 2018 and the months ahead, because that gives us the opportunity to explain exactly what we've done and how we think we are positioned to really catapult in terms of our share price. When I look at our share price, I look at our valuation now. I think there's a massive disconnect between the value that you get and the price that you have to pay. We're about a $10 million company. We've got about $1 million in working capital, no debt. Enterprise value is about $9 million. You look at what we have in terms of the Mirado project and its ability to generate its own cash flow. You look at the huge upside that the Knight project has, and then you look at an additional cash flow generating opportunity vis-a-vis this spin-off company that Orefinders and its shareholders are going to benefit from. I think the market is really going to start to realize this, and it's going to take off on its own. And if the gold market takes off like it really looks like it's going to, because of all the uncertainty on the macroeconomic side, you know, this could really be a fantastic year for Orefinders. Keep in mind, not too long ago, we were a 70-cent stock. We were almost a $40 million market cap company, and we did not have nearly the value that we have as today. So I don't like to predict. In fact, I will not predict where our share price is going to go, solely for the fact I don't want to underestimate where I think it's going to go. But I think I know that we're worth more than we were in a different time, and that was in a different context of the market. So I'm going to get started here. I guess I didn't introduce myself off the top. My name is Stephen Stewart. I know many of you on here. You'll note here, you'll see the first slide we have in our presentation is something that most mining companies really just gloss over and they don't pay too much attention to. But I'm going to highlight this because I'm going to be making a lot of forward-looking statements as the regulators so define. You know, first and foremost, my first forward-looking statement is going to say that I think that Orefinders is the cheapest pure play gold company on the Toronto Venture Exchange. That's obviously my personal belief. I'm biased, but you know, I believe in this company. I believe in this assets, and I can look at our comparables and I can see we're wildly undervalued. And I'll explain why I think that. I'll also say, you know, my purpose here is to convince you to buy more Orefinders shares, and that is going to benefit me directly. I'm a significant shareholder. That's going to benefit my friends. That's going to benefit my family. That's going to benefit our board because we're owners. And we think like owners. We act like owners. We're very sensitive to our cost of capital. That's why you'll see us not raise money in the absolute near future. We think we're too cheap in terms of what price we'd have to offer our shares out in a private placement. As I said, we've got about $1 million. So, and we're not planning any major drill programs, so we don't need to raise the cash. And my goal here is to, as I said, be very frank and encourage people to buy our shares on the market, create the demand, tell our story, and explain the difference between price and value, because there's a massive disconnect, and that exists on the junior market for both the upside and the downside. So Moving forward here, this is, the typical opening slide, which I won't pay much attention to, but, moving forward, the three things I want everybody to take away here today. There's a lot of information, but I want you to remember three things. One is the Knight project. Look at those grades, 18 grams over 65 meters, 13 grams over 82 meters. I challenge anybody to find a higher value gold intersections in Canada. I haven't seen them. Maybe they exist, but I haven't seen them. And those are just two of many. There's a lot more intersections there. I'm going to explain what those mean and how we're going to develop the Knight project. But I think those just stand out. Could you imagine if we just drilled those yesterday, what the stock market would do? These are, and I emphasize, these are not historical holes. These are not holes that were drilled in the 1940s and there's no core. Quite the opposite. These holes were drilled in 2002, and we have the core. And as far as I'm concerned, there's tremendous value there, which I'll go into more detail. The next, I want to point out our Mirado mine. Everybody knows us for the Mirado mine. We had eye-popping numbers: over 150% IRR. NPV undiscounted over $30 million. The reason why I don't like to talk about the discounted is because this is only a 3-year project. It is, I like to call it a project within a project, or the tip of the iceberg, because that's all it is. Our maiden resource had 442,000 ounces at 1.3 grams per ton. What this new resource is comes out to an average of about 80, I think it's about 80,000 ounces at about 2.6 grams per ton. All those ounces that, and we use a cutoff grade of 1 gram per ton, which is very, very high when you consider Malartic and Detour mining at an average grade of 1 gram. We're not even contemplating anything under 1 gram. And what this PEA does, as I said, it only defines a very small percentage of the project. It does not define the Mirado. There's so much more to the Mirado, but this little project, it's a project within a project designed to generate free cash flow to our bottom line so that we can unlock the value on the Mirado, on the Knight, and on other opportunities. Very few juniors have the ability to generate any cash flow, let alone cash flow like that. And the third thing I want you to remember out of this presentation is our battery metals spinoff. We just announced it. This is a new concept. When we acquired the Knight project in its entirety, it's 9 projects. One of them happens to be a very interesting silver cobalt mine to the east of our core claims in the Knight township, and we're going to be spinning that off. And I'm gonna actually move forward because that's the first topic that I'm going to talk about during our presentation. So this is what we call it. It's the Mann mine. It's a very high value, but it's what we consider a non-core asset. And why is it non-core? Because it's not gold. And Orefinders is a pure play gold company. You will not see Orefinders get involved in any projects that are not, as I said, gold, or specifically in the Abitibi. That's where we, that's the opportunity we like, and that's the jurisdiction we know best. But the Mann mine, it just sort of came in with that land package, and we're very happy that it did. We are going to be spinning it off and taking advantage of the valuations that just absolutely cannot be ignored that the cobalt and the battery metal sector is getting. I'll reference a number of our comparables in the battery metal space. Look at Cobalt Power, 27 million market cap. Look at Castle Silver, $22 million market cap. Look at the big daddy and First Cobalt. They're $240 million market cap. Now, First Cobalt aside, they're a bit of an outlier because they actually own a processing facility. But look at those other two companies, and even look at the exploration and development assets of First Cobalt. They don't have what we have, or I should say, I believe that the Mann is as good or better in terms of prospectivity for silver and cobalt than any single one of these other assets these 20, 30, $200 million companies have. That's the opportunity. We don't get any value for it in Orefinders because typically gold companies just don't get value for cobalt assets or vice versa. That's why we believe in the pure play philosophy. So we're going to be spinning this out. This is already in the works. We've got a 43-101 on the Mann property underway. We've got the audit in place. We're going to be spinning it out into a completely new publicly traded company. I've had a few questions on how this whole transaction is going to be structured and ultimately spun out. Firstly, there was a couple questions that talked about potential dilution to Orefinders. I want to be very clear. This will not impact Orefinders' share structure in any way whatsoever from a dilutive standpoint. This is going to be extremely accretive. We're going to be spinning it out. Orefinders is going to be receiving shares in this new company. In the next slide, I'll talk about how that all plays out, but I just want to talk about what the Mann mine in this new company is going to be. We are calling this company Power Ore Corporation. As I said, it will be listed on the Toronto Stock Exchange. We expect that listing to probably take between 2 and 3 months. What it's going to be focused on, it's going to be focused on, just like Orefinders, it's going to be focused primarily in the Abitibi, but it's not going to be gold. It's going to be assets whose metals are used in the manufacture of EVs and mass energy storage. Now, what does that mean? Well, cobalt is absolutely one of those assets, and our Mann mine is the first asset, but there's going to be many to follow. We're not just hitching our horse to the cobalt bandwagon. We see a much bigger and broader opportunity with these battery metals that are really at the inflection point in terms of growth. So we're interested in cobalt, we're interested in lithium, we're interested in manganese, we're interested in vanadium, and what we're really interested in is nickel. Nickel, in our opinion, is the real battery metal, and we want to have exposure to that. So we are going to be leveraging the values that the Mann mine can achieve in the market, and then we're going to go out there and we're going to acquire a deep and a wide portfolio of assets, that many of which we've already identified that we will be rolling into, and they'll all be advanced stage assets. They'll all be in Canada, or more specifically the Abitibi, where the discovery's been made and the mineralization is understood, and you can get to these things with ease. That's going to be a big selling point for this company going forward. And so this is a new company. As I said, why, as Orefinders shareholders, should you care about this? Well, I really think you should, and this is why. So I'll preface this with the details. The final details will be announced shortly. We will be having a shareholder vote. We certainly hope you'll all approve it. I think the economics show that it's a no-brainer, and this is why. So the new company, upon its initial financing, which will be independent of Orefinders' capital structure and balance sheet, and in its initial listing, 50% of Power Ore shares will be paid to Orefinders, okay? Of these 50% of shares, we are going to keep 50% of that, so 25% of the total Power Ore shares on Orefinders' balance sheet. And that is so Orefinders, the corporation, can retain exposure and upside to what we think is a fast-growing story that Power Ore is going to expand and capitalize on. Then, as a bonus to all of our shareholders, and this is very important, I think, we are going to be distributing the other 50% of the Power Ore shares that Orefinders gets directly to our shareholders. So that means 25% of Power Ore's initial equity shares will be distributed pro rata to our shareholders. The ratio is to be determined, but that will obviously be provided to you in short order and well in advance of a shareholder vote. Well, you will approve on it. But the bottom line is this: think of this as a bonus. Just as an Orefinders shareholders, you're getting in a sense a freebie for Power Ore, and I would encourage you to hold on to this Power Ore. The Power Ore initial price will just be the beginning, and as I said, we're going to be growing it, and I expect the share price to be appreciated. On that note, if anybody is interested in participating in this seed round for Power Ore shares, well, contact me directly. We're I would say fully subscribed for it, but there is still room at the table. This will go through, and you will get in at the ground floor, as they say. So we're quite excited about this, and there's a huge opportunity with the EV market and the battery metal markets. I won't go too much into detail about why I think that market is really set to explode. But if anybody wants to talk to me offline about that, and specifically about Orefinders or our Ores plan, I'd be happy to do that. So moving on. Now, Orefinders assets. This is sort of the heart of Orefinders, getting away from power ore. As you can see, we like the Abitibi for very good reason. It's a great place to do business. In fact, I think it's the best place in the world to do business from a jurisdictional standpoint and from a geological endowment standpoint. There are mines all over the place, whether it's the Porcupine-Dester Fault that runs from Val-d'Or over to west of Timmins in the north, or the southern break, the Cadillac Fault, or our right-out shear zone fault, which is more applicable to the Cote Lake and the Knight projects. So you can see we're well situated right in the heart of the Abitibi. We've got our Mirado mine project there just south of Kirkland Lake. It's about 30 kilometers from the Macassa mine in Kirkland Lake. And then about 80 kilometers or so to the west, we've got our Knight properties, which is in the Shining Tree district that is well known. We sit right on top of the Juby deposit, which is in a global envelope cost, global envelope, a 4 million ounce deposit of about a gram. And you know, that cannot be ignored. That is a significant deposit. And I am particularly excited about the Knight. While I think the Mirado has fantastic upside and obviously cash flow generating potential, I really think the Knight is exceptionally exciting, potentially a real big company maker. We, for those of you who don't know, I'll point out a project on the west side of this slide called Cote Lake. Our management team, led by my father at the time, was the individual responsible for consolidating 17 different property owners in Chester Township and drilling the discovery hole, which ultimately became the Cote Lake deposit, which was sold to IM Gold for well over $600 million in 2012. As you can see, it's nearly a 9 million ounce deposit. It's going to be a low grade open pit. It's worth well over $1 billion now on IM Gold's balance sheet, and they're in the process of moving it towards a feasibility stage, et cetera, et cetera. Now, why is that relevant? Aside from the fact that our team has a track record of doing this sort of thing, well, same thing happened in the Knight in terms of consolidation, looking at high-grade former producing mines in a different context where it has bulk disseminated material. So we think this has the potential. Again, I'll reference a forward-looking statement, but we see this as having potential that is larger and higher grade than Cote, and so that's why we're particularly excited. But I'm going to shift gears back again to the Mirado project here. The Mirado, and I start with this because this has been our bread and butter ever since we went public back in 2013. It's a fantastic project. It's located in great jurisdiction in Kirkland Lake. You can drive your Honda Civic right to the project. We own this project 100%. I think that's very important to consider when you're making any investment decision. You want to understand, does the company own this asset, or is it just some option that they have to make a whole series of balloon payments outright? As I said, we own this 100%, and they're patented claims. They're not mining claims, they're patented mining claims, meaning we own the surface rights and we own the mineral rights. That means this property is not going anywhere, and we have the ability to be patient. It's about a 2,400 hectare project, and as everybody will know, we did a bulk sample in early 2017 where we ended up selling over 1,400 ounces of gold and toll milling it at IM Gold's facility at Westwood. We saw that, or that was in my mind, a proof of concept for what the PEA now defines. So we sent, for contextual purposes, and for the bulk sample, we sent 25,000 tons of material, or just under that. That means, in layman's terms, 1,000 trucks, 1,000 big tractor trailers to and from our projects to IM Gold. So that's 25,000 tons. What this PEA does effectively takes that bulk sample, but expands it in a big way where we're going to be expanding the pit. So we're looking now, contemplating 1 million tons, 1 million tons. And we expect the grades to be substantially higher at 2.6 grams per ton because we're going to have a lot better grade control. Because we're going to be mining this material. We understand where the grade exists in situ, whereas the bulk sample, what we did before, that was mined by somebody else and it sat in a pile for 30 years and it was a grade control was a big challenge for us. So we expect the economics to be the operating economics, the OPEX to be the margins to be much higher on this, and obviously we're looking at 1 million tons as opposed to 25,000 tons, which yielded 1,400 ounces. So this project is quite interesting. And as I indicated off the top, the economics really just speak for themselves, as you can quite see. Why do we have 158% IRR? That looks like almost like a cartoon. It doesn't look real. And the answer is very simple. Cost to restart this is almost negligible in terms of a mining operation. The report, as it's written right now, has a $2.4 million capex, and that means we pay our capital back on capex in 7 months. There's not a lot of work to be done. The road is in place. There's a bridge in place. We're not building a $100 million mill. We're not building a tailings facility, which would take 5 to 10 years for permitting. It's, as far as mining goes, this is a relatively straightforward process. I emphasize there are always risks with mining, but we see this operation, given the infrastructure it has at hand and given the availability, and this is very important, given the availability of capacity at local toll mills in the area, we see this as a no-brainer for us to take advantage of. We're playing the hand we were dealt, and there's tons of capacity. So you'll see us in the early 2018. Priorities on the Mirado are as follows. We will be finalizing a toll milling agreement with one of the local mills. The Macassa is a Kirkland Lakes mill. That is our priority mill as it's closest, but there are others. And so we're going to be looking for the best deal, the best economics we can get. Just by way of context, the Macassa currently has a 2,000 ton a day mill, but they only operate at 50% capacity. So they've got 1,000 tons of empty capacity at that mill. And I'm not sure if it was coincident or not. In fact, it wasn't, but we ran this report at 1,000 tons a day. So that's, this in a sense is I don't want to say a calling card, but this fits perfectly within the context of the Macassa. So next milestones for Mirado is securing the toll mill contract and then permitting. Permitting, it's going to take 6 months at minimum. In the context of permitting, that's a drop in the bucket. And why this is sort of expedited, because we did the closure plan. We did a lot of work over the years, and we did a lot of work on our closure plan, which was completed and filed with the ministry prior to the execution of the bulk sample in 2017. So there's a lot of work that's already been done on this front. There needs to be amendments to be made. We've been advised it's a minimum of 6 months, but when you're dealing with the government, you always have to give yourself a buffer. So, we're being a little more conservative internally and thinking it's probably going to be a year time frame to get our permits. As I said before, on the Mirado, I want to emphasize that in the context of mining, this is a small project. It's highly profitable. It's super high grade for an open pit at 2.6 grams per ton right in the middle of Kirkland Lake, but it's small. So I want to point out this map right here, as you see on the right-hand side. It outlined in the blue, that's the Mirado project as it is today. To the south of us, you've got the Osisko group of companies own what is now the Oban properties there, but we're not focused on that. Where you see the red on the map as outlined, that is the 2013 maiden resource that had, as I said, 442,000 ounces at an average grade of 1.3 grams per ton. That's pretty good grade. In fact, that's very good grade when you consider other pits like Cote, like Detour, like Osisko have a gram. So 1.3 is not bad, but we see this as having multi-million ounces. And in order to get to multi-million ounces, you need to drill it out. And obviously that's what the open pit is designed to do, to facilitate. But what I want to point out, so that 442,000 ounces in the red, for the purposes of the PEA, we're only contemplating what is south of that dotted line, which is called the Mirado Fault. The Mirado Fault itself divides what we define as the south zone versus the Mirado north zone. The south zone is where the open pit style of mineralization is, which is a typical Abitibi shear zone high-grade vein system. The north side, which is completely ignored and not contemplated in this PEA, as are ounces at depth on the south zone. The north zone, we believe, has a totally different style of mineralization. We think it's a VMS style mineralization. It's got zinc, it's got silver, it's got copper, and it's got very high grade gold, and it's deeper. The Mirado North was in production in the 1940s. So about 40 to 50 years before the South Zone open pit was in operation, which was in the late 80s, there was a totally separate mine there. So it's kind of unique to have these two different styles of mineralization. And I guess I'm just trying to emphasize, again, as I said, this PEA is the tip of the iceberg. There's so much more going on in the Mirado. We don't even talk about what's going on in the south. As you see on the south part where it says Gold Hill, there's an 1,100-foot shaft there. That's another mine that was operating in the World War II era. The reports that we have, the historical reports indicate they were pulling out an ounce per ton out of this mine when it was in operation. In 2015, we did geophysics on this to find to line up the vein system that we found, and we mapped that surface, and it lined up quite nicely. So what that means is we've got great geophysics, we've mapped it, we see the vein that come to surface, and we know that there was high grade at surface. We haven't even drilled this. So that's the sort of upside potential. There's potentially a mine on this property that we haven't even contemplated, a future mine, I should say. And then there's all sorts of other prospects, including the Bank Zone, the Charest Zone. There's a lot going on the Mirado, and the idea is we absolutely need to drill it out. That's what all exploration and development companies need to do. But the difference between Orefinders is we're trying to finance it in an accretive way, so we don't blow out our shareholders and continuously have to go back with our hat in hand to the markets, especially when the markets are not pricing these opportunities, in my opinion, fairly. Okay, so moving on, these are our NAV sensitivities. As you can see, gold prices now $1,350. If we ran the numbers at $1,350, the project is quite sensitive to gold price. So now, in fact, the NPV at today's gold price, the last I checked, is $35 million. So it's quite an interesting project. So I'm gonna move shift gears, and I'm gonna talk about the Knight project. And now that we acquired the Knight, we fully closed on January 4th this year. As I said, it was a long process in the making to acquire this asset. A lot of moving parts. It was 9 properties, 3 different property owners. We're now a major landholder in what I think is going to be the hottest district. I think it's ultimately going to be as hot, or maybe even hotter, than the Urban Berry district that everybody is just piling money into. This Knight district is underexplored. If you do a little research, you'll find that this was under a land caution from 1970 to 1996, and what that means is that there was absolutely no exploration done in this area for 25 years. This is Abitibi Greenstone Belt, and it's underexplored, and it's misunderstood because the whole area has been fragmented. There's only really been one player in the area of significance, and that's the Juby, and I'll talk about them in a bit. But other than that, these properties were fragmented. And why is that significant? Because nobody took the time or had the ability to look at it in a single, cohesive, unified model. And that's what we're doing. And that's how we're going to add value. And before we roll out the drills in any significant way, we're spending a lot of time and effort with data input. We acquired a lot of drill core. There's a huge drill core facility on site. There's a lot of electronic data that comes from different properties and different people and different ways of entering it. So right now, we're just in data entry mode as far as the Knight project is concerned. And it's going to be able for us, and led by our technical team of Charles Baudry and Ken Ritte, those two are going to solve the riddle of the Shining Tree and of the Knight project. And again, I reference the forward-looking statements, but we really see this land package here on this slide. So you can see our properties in blue and Tahoe Resources property in gold. We see this as a 10 million ounce deposit. So when I said, a company maker, we really believe that. There's no question in our minds, but obviously the qualifier is, does this need drilling? Well, absolutely it needs drilling. Talk is cheap. But again, this drilling, it's all about how we're going to finance this drilling. And that's why I think Orefinders is unique, because it's going to take a lot of drilling to get to 10 million ounces. That doesn't happen overnight. but this checks all of the boxes, and that's why we're so excited. So let me set the table a little bit here. The 5 properties you see in blue up above, the Duggan, the Porphyry Lake, the Tyrenite extension, the Tyrenite mine proper, and the Minto. That's our core Knight projects. As I said, we acquired 9 projects in total. There are 3 to the west that are not on this map. And there is 1 to the east that is not on this map, about 30 kilometers to the east, and that one is the Mann. I won't worry about the ones on the westerly side of this for now, but I already talked about the Mann. But when I say the core projects, this is what I mean. There are a number of former producing mines on here, including on the Duggan, including on the Minto, which has those eye-popping results, and then the Tyrenite, as I'll show you as well, and of course the extension. We see, and then you've got the Juby. Let me touch upon the Juby here. Tahoe Resources. They're a major mining company. They I think they're about a $1.6 billion company. They're focused in Guatemala and Peru. They also have operations in Timmins. I've made no secret of it. Our intention is to acquire that property because that is what is necessary in order for this to become that 10 million ounce deposit, which we see happening. The 4 million ounces would give us an incredible head start, and if we were successful in acquiring it, it would absolutely be a game changer for Orefinders. So that's why we think this whole area is so significant. Tahoe is, as I said, a big company. We've been in discussions to do it. When I say it, I mean acquire it. I cannot predict the future, but certainly they're aware of our intentions, and they're aware of our technical team, which they like, and they see our vision. As I said, they're not focused on this area. This is not shippable to Timmins. This is an exploration project, and they're a large mining company. So it's our hope that they'll see value in rolling this into our company and becoming our partners. I've already talked about the Knight project in enough detail here, but again, I want to emphasize we own these properties outright, 100%. There are no option payments, and just like the Mirado, these are patented claims, so they're not going anywhere. They are ours in perpetuity until we decide to sell them at one point in time. This whole area, including the Minto, is endowed with, as I had already said, some of the best drill intersections that I've ever seen. I'm not going to repeat them again. I think they speak for themselves. I will qualify that the Minto, as you'll see. So before I point out the Minto, I'll scoot back here and look. The Minto is only a small, very small footprint in terms of property that we own. And this is what it looks like. It's about a 30, we estimate here, a 30 to 60 meter diameter pipe. And it goes, the mineralization starts right at surface, and it's been drilled down to 1 kilometer. So this thing goes really, really deep. And what you're looking at here is a cartoon version of it. And the previous operators actually evaluated mining the very, very top part of it. And that's not even where those super high grade parts come. Those come a little bit deeper. But the reports that they did in the preliminary engineering that they did showed to be quite a profitable situation. Now, that's not going to be our focus. We already have a near-term cash flow situation in the Mirado. And we see bigger things than just focusing on that with respect to the Minto. How the Minto has been described to me, and I like this description, is that it's a finger. And that's what these breccia pipes are. They're sort of like carrots in the ground, but it was described as a finger. And these fingers typically, when it comes to geology, don't just appear by themselves. They often happen in clusters. So we suspect that there are many of these potentially other very, very high grade fingers on our property. And that's interesting. That's a lot of high grade gold. But what really gets us excited is finding the hand. So, you know, the fingers, high grade, not huge tonnage, but very high grade, very profitable. But it all came from somewhere, and that's the hand. And that's ultimately what we're out there to find. And we think, I flip back here to these maps, we think we're going to find the hand on the Porphyry Lake and on the Duggan properties. That's where the big bulk tonnage ounces are going to come from. The sexy high grades on the Minto, even some on the Tyrenite and the Tyrenite extension. But if we want to make 10 million ounces it's the Porphyry Lake and the Duggan, and they've had some pretty impressive drill holes, which I'll get to right now. So this is where we see mineralization that happens right at surface. It's a different style of mineralization that happens in the Minto. This is not a breccia pipe. But what happened? What happened in this area? Something significant on a fault structural scale happened in this area, and the gold just bled out, and it bled out in different styles. So this is exactly the complex geology that you want to see for big world-class type deposits. So we think it happened over a period of 30 million years. That's what our theory is, and I won't get into the details as to why, but we see it as a long, protracted gold precipitation. Again, that's the type of mineralization or event that you want to see in the Abitibi. It's not unique to the Abitibi. That is the Abitibi greenstone style if you want these big mega deposits. So I'll refer just quickly to the Duggan drilling. 1.5 grams gold over 75 meters in one hole. Another at over 2 grams over 35 meters. Those are very, very wide, nicely disseminated holes, and those holes happen right at surface. So that's not deep. That is bulk tonnage stuff. That needs follow-up drilling. Absolutely, that is going to be a priority. We also had some really nice wide intersections at almost 2.5 grams on over 15 meters of Porphyry Lake. I mean, Porphyry Lake, as the name would indicate, there is a porphyry system there. So what a porphyry system means, huge tonnage. And that's where we see huge tonnage. That porphyry was driving the mineralogy and recirculating the fluids and concentrating the gold into hopefully economic deposits. And that's what we're out to prove. Moving on again, I showed you the Tyrenite mine. So the Tyrenite mine is probably the most developed asset that we acquired. It was in production in World War II as well. It was totally rehabbed by a well-known group backed by Rob Cudney in the 1990s. Totally rehabbed. You see the mine shaft there. It's got a skip. It's got a hoist. All rehabbed and operational. The mine is flooded, and it's got some really good intersections there. And I'll sort of point out, this is a cartoon of the Tyrenite mine on the left-hand side, as it was known back in the 1990s under Cudney's watch. What they didn't own at the time is what we did acquire on January 5th is what we call the Tyrenite mine extension. So what you're seeing on the left-hand side is the shaft and the drifts, and in the green is the mineralization as indicated by diamond drilling that happened over a period between 1987 and 2011. You'll also see there is a resource at the very surface of the Tyrenite extension, which we just acquired, and there's gold there. But what hasn't happened, it hasn't been drilled at depth, as you will see. So there is an opportunity there to take the Tyrenite mine in and of itself and put that into production in the not too distant future. Does it need more drilling? Well, yes, it does. That's like all of our properties. But I see this as a huge opportunity to expand the mineralization relatively quickly. And when we do, we've got a mine infrastructure in place. So it's really a cheap option on putting a mine back into production. And when I talk about the big picture of the Knight project, I'm not even talking about the 10 million ounce, including in the Tyrenite. I think the Tyrenite sort of stands on its own as a mining project. The big bulk tonnage is going to happen between the Duggan zone, on the Minto section, and as well on the Duggan and the Porphyry Lake. Want to talk a little bit about the Knight project history and the price that we paid for it, and how I think it's an absolutely incredibly accretive transaction for our shareholders. To put it mildly, I think we stole this property. We bought it in 2004 January of this year for $1.3 million in Orefinders shares. Okay, we did that at 7 cents because that was what Orefinders share price was at the time. Look at the value that has been paid or attributed to this exact same land package in the not too distant future, and by not just some fly-by-night junior, by some of the smartest guys in the industry. I referenced 2010, Franco-Nevada, probably the smartest group of guys in the mining business, paid $1.5 million in Creso, which was the previous operator, at $1 per share. And that's at a valuation of $73 million. That's what the smartest guys in Toronto in the mining business thought this was worth before they even drilled some of these monster holes. Same goes for Hunter Dickinson. They're a very well-known group, very well-respected group out of the West Coast. They agreed to pay $43 million for 69% of that asset. All those deals fell apart. The market absolutely fell apart in 2013, and the company that owned it, which was Dundee Sustainable Technologies, ended up selling it to a private company as they were in desperate need of cash. And ultimately, we did the deal with the private company to acquire this, and now we own it outright. So for something that was being attributed $70 million by Franco-Nevada in this decade, we picked up for $1.3 million in Orefinders shares. I think that's a pretty good deal. This slide here just talks about, as I said before, the long, protracted gold event that happened here. I won't get into this in detail, other than to say, again, something really significant happened here. Nobody's figured it out. We like our ground. We like our rocks. There's big upside here. I talked about our leadership. The key people are obviously myself and Alex Stewart, who's our executive chairman. We lead the corporate side, the finance side, the acquisition side. We do so hand in hand with our technical team of Charles Beaudry and Ken Ritte. Charles is a very well respected and extremely knowledgeable geologist. He is a former director of the PDAC, and he's currently the chair of their geoscience committee. We brought him in here in Orefinders, and when I say we brought him, he came to Orefinders because of the Knight project. Charles is after, as we all are, after a really big ore deposit. That's where we see this opportunity, and this is what attracted Charles. And that's the Knight project. And that's who's leading our technical side. And we believe if anybody can do it, it's Charles. As I said here's our management team. I won't go over in detail who they are, but I think we're among the better groups in Canada who do what we do. So in closing, I'm just going to wrap up, but I want to emphasize if there's just three things you can remember. Remember the Knight project, what we paid for some of the best drill intersections in Canada, 18.2 grams over 65 meters, and there's just so much more that I didn't even talk about, but we bought that for $1.3 million in Orefinders share. That is going to be a real winner. No matter what happens, we bought that cheap. I like to say, there are condos in Toronto that sell for significantly less than one of the most interesting gold projects in Canada. So I think that is a good transaction. The second thing I want to point out is the Mirado mine. Fantastic economics. And finally, another non-dilutive, accretive transaction that we've been able to accomplish, or you will see us accomplish in the very near future, is this battery metals spinoff. And if anybody wants more information or wants to participate on that, they're free to contact me directly, and here are my contacts. As I said, my name is Steve Stewart. I'm the CEO of Orefinders. Email me or call me. I get back to every single shareholder every single time. Follow us on Twitter. Go to our website, see our videos on drill bits, where you'll see me and other people talk about not just the company, but various pertinent aspects of the industry. It's part of our attempt to communicate directly with our shareholders. We take our shareholders very seriously. As I said, we are owners, we are shareholders, so our interests are very much aligned with yours. And so when you have a question or concern, we get back to you, and I think that's very important. Last, before I sign off entirely, we've got a couple of events coming up that I want to point out. We've got the China Mining Investment Forum. That's in March 2nd. That's in Toronto. If you want more information on exactly where that is, Google it or email me, and I'll tell you exactly where it is. The PDAC is coming up on March 4th to the 7th. We have a booth like we do every year. It's booth 2322. Come see us. Come see me. We'll talk about the project. We'll talk about the business. I love to do it, and as do everybody at our company. We'll be there all 4 days. We will be doing 3 presentations, 3 separate presentations that either Charles and I will be doing at the PDAC. We are getting a lot of attention. I will be having a news release out on that, giving you specifics on when you can actually come and see the presentation. And finally, we've got we're going to be participating in the Northern Miners London, UK Symposium. That's in April 24th and 25th. That's a typo there. It's a 2-day event. I was there last year. all the big names go. We're going to be making a presentation. This story is going to be very relevant to those in London. That's a very, very big and deep market who like Canadian gold. So I'm excited to go there. So in closing, thank you very much for taking the time to listen to our story. We're extremely excited about this year. And as I said, if there's any more questions about any of our activities, you just reach out to me and we'll chat about it. So have a good day and take care.